I'm Jo Bills from Freshagenda, and I'm here talking to
Steve Spencer, also from Freshagenda.
So Steve, what are you working on at the moment?
Thanks, Jo, for that question. We're in the latter stages of working through a large update to our global dairy directions product, which will come out tomorrow to subscribers.
So Steve, whenever you do one of these quarterly updates, you look at some hot items. So what's hot for this June outlook?
Even though we're in the depth of winter here in Australia, we've got some hot things to look at. I suppose the big changes in the world is that Europe's coming back into production growth. And with that, we're seeing different rates of growth in different regions. We're seeing shifts in product mix. And we look at how that plays out over the rest of the year. Naturally, they're favouring cheese. They're putting less into skim milk powder, butter, and whole milk powder. But that plays out in different ways in different countries. So that's a fairly big influence on where trade is going. Okay,
so I guess one of the reasons that they're not putting so much product into skim milk powder is because of that huge intervention stockpile that they're looking at. What's happening with that?
The stockpile is reasonably static, so it's reached 350,000 tonnes. It's overhanging the market, and it is certainly driving or dominating the considerations of pricing for skim milk powder globally. So there was some talk of some immunity for some parts of the world. That seems to level out in the last short while, and prices have converged. So that's what we look at in our modelling at the moment, and I try to extrapolate and explain for subscribers is how might that play out over the rest of the year, and what's the projection for free stocks that aren't in intervention, and how does that look?
And so, Steve, I've heard a term deprived persons in relation to the EU policy in this area. Can you explain that for us?
There's been a fairly recent development. It's a program used in the past that the European Commission is seeking offers or bids from member states to essentially put product through into the marketplace for the benefit of people who aren't so well off through subsidised programs, and there's a different set of regulations around that. So it's less stringent, and I guess what it means is the target prices the Commission might have been seeking for intervention, which had drawn not many bids, had indicated a low response. So this might be at a lower price, and therefore we're going to expect to see product in the market. Something like 60 to 80,000 tonnes might be sold into that channel by the end of the year.
So even if you're doing it tough, at least you'll have some skim milk powder. I'm sure that's a lot of comfort for people.
It's a little bit old, but might still work.
What's happening across the Tasman with our Kiwi friends?
So New Zealand's gearing up for what looks like a fairly large growth in milk production. Milk prices are very good. Seasonal conditions look like they're going to be normal. The herd's reasonably intact. So all the expectations are that we're going to see production rebound from what was a pretty ordinary peak last year. Therefore, more product on the market. The market's already starting to price that in with larger volumes of whole milk powder. We've seen GDT and futures prices fall recently, expecting that. So just how much and how that's used is going to be quite important.
Yeah. So, Steve, one of the interesting things we've looked at we've seen happening over the last 6 months or so has been the absolute explosion, for want of a better term, in fat prices. Where do you see that going?
What we can see on these couple of pictures that you can see now on the screen are what some of the major drivers have been for those explosions in prices. It's a great tightening, or chronic tightening of stocks, both globally and particularly in Europe, which seems to be driving values mostly. We look at how this might unwind and what time frame and what caused that to happen. So naturally that means more product available. We're not seeing demand or any big signs that demand is weakening. Trade is certainly down, but that's simply with lower availability. So we project some of the unwinding of that and what time frame that might take. It's pretty interesting stuff, and naturally there's a lot hanging off this because it's It's driven other prices, and the great disparity between fat and protein now, which has rarely been in this territory, will play out differently as well.
Sure. So, Steve, you mentioned trade there. What can you say to our viewers about trade more generally in terms of the dairy space?
Trade has been pretty flat in the last 6 months or so. That's been more about less product being available. Most regions have been down, and where product availability has increased, we've seen trade pick up. So I think, is the market being tested? Low prices have been very, very attractive, but we haven't seen trade ignite. I think that's now we've seen some greater availability in some product groups. We might see that start to take off. We certainly need it to take off to keep the market in a broad balance. But in some regions where there is capacity, we have seen, say, China, Southeast Asia, cheese demand has been fantastic. That's continued, and we've seen other products growing quite well. So the all-important milk powder demand is where we need to see that take off with more supply coming on.
So I suppose in that regard, China's fairly critical, Steve. Are we going to see China ignite in terms of powder demand?
The expectations are that China should pick up later in this year when there's more certainty around the regulatory regime for producers of infant formula within the country. So there's an expectation we might see that pick up in the latter half. Trade in the last 6 months has also been pretty flat, but again, that's about lower availability. But imports in cheese, infant formula have been quite strong. So that may change. We'd expect to see milk powder, whole milk powder imports improve over the rest of the year to rebalance that internal market in China.
So, Steve, I suppose the other important aspect in terms of that supply balance for dairy is what's happening with feed markets. Have you got a bit of a view on that in this current global dairy directions outlook? Sure.
It's glut. Feed markets are still well supplied. Nothing's going to change that quickly at a global level. The big feed producers seem to be producing about the same as the prior year, so the global market is still very well supplied. There are some hot spots. Europe's having a hot summer, which is going to shorten some of the supplies. That'll mean there's less for them to export, but they'll keep their home markets well supplied. So dairy farm prices, dairy farm costs, I suppose, would not change greatly, and we're going to see conditions continue to favour growth in milk.
So, Steve, I guess the big engine driving this fantastic global dairy directions outlook this time and every time is the Dairy Trade Simulator. There are a few subscribers out there who are lucky enough to have the Dairy Trade Simulator arrive in their inboxes every month. What can subscribers expect from the simulator this time around?
Well, with the world becoming more complex, and I suppose the layering that analysis requires to help people get to some improved usefulness in being able to model things quickly. So we've done a lot of work in improving navigation, dashboards that bring the commodities into view more readily, allowing a full add-up to be more apparent on that market. So we've got some new features in there that have done that. We've put some new features into interpreting the product values into what's that mean for milk, and therefore what do the relative product values look like, and how that might be useful to understand manufacturing decisions as we go forward. So that includes where spot prices are and what does it mean is worth more to where's the best return, but also what do the futures profiles look like and what might that imply. So that is done across the three large producing regions, New Zealand, EU and US, to show what those relative returns are. That's a big new feature. We've looked at, again, overhauling or reviewing our projections of value, because the influences always change and there's nothing static. So things have changed in how values are being set, and we try to keep it in front of that and model those accordingly. And we've made some changes in what's driving, particularly in fats, in the last short while. So there's some of the important things. We've also done some more detailed projections on fat and skim milk powder and how that plays out. So a lot of new features and a lot of new things for people to look at and use.
Well, it is certainly, as always, a complex and potentially volatile market, and if you've got that dairy trade simulator in your hands, you're well ahead of the game, I think, Steve.
We'd think so, yes.
Well, thanks for talking to me about it, Steve.
Always a pleasure, Joanne.